Over the past few weeks, many of friends and clients have been reaching out to me. They've been sending some videos, some reports, some suggestions that the stock market is likely to crash. Some of them have called in earnestness, in a little bit of fear and apprehension that what will happen to their investments if the stock market were to crash. Should we take out the money? Should we move it elsewhere? All these matters run in the mind. Yet, each of these investors who reached out to me are long-term investors. They are here for the long haul, 5 years, 10 years, 15 years and beyond. So while I was thinking about what I should answer, because at the end of the day, I too don't know the future. Whether the markets are going to crash or not is anybody's guess. But what we can all know is the past. What I did is to quickly go back and review the past 25 years of how the Indian stock market has really performed. At the turn of 1999, the markets, the Sensex value, index value was about 3,300 thereof. Today we are talking about 82,000, which means in the last 24 odd years, the markets has generated about 24 times returns. Now this 24 times returns is not a linear return. It has not happened every year. There have been 3 major crashes that have happened in the past. I'm just going to try and relive those 3 crashes so that we are able to understand how the stock markets have really performed in the past, therefore are in a better sense to take a decision in the future. At the end of the day, if we don't understand history, it's bound to repeat itself. Therefore, let's first look at the first fall. The first fall was what we would call the dot-com burst. The dot-com burst happened immediately after the Y2K problem in 2000. And in 2001, the market started going. It had reached a peak of 5,400 on the Sensex around February 2000 odd, and then the market started correcting. Everything that we believed the internet would do continued to unravel in the stock market globally, not just in India, globally. And then September 11 Twin Tower bombing was really the low point of the market. The market hit almost 2,800, almost 50% level to which the market had been earlier. It was a very, very difficult time for most investors. But in a span of 3 years, the markets rebounded back. It went back to that 5,000 plus points in a span of say 2.5 years. By 2003, the markets were well and truly on their way back up. So that is the first crash that I'm going to talk about. Now that crash involved a certain amount of bubbling in the economy thanks to the Internet of Things and so many other ideas related to the IT field. Post that, in 2007-8, we had the second major crash that we saw in the last 25 years, which was the global financial crisis. In the India side, while this was manifest itself in the US, Indian markets too crashed. We were almost at 20,000 plus points and the market crashed all the way down to almost 9,700 points. It was a big, big fall, almost 65% down in value. Huge. Yet, in a span of a couple of months, the markets rebounded back. In fact, I would say in a span of about 2 years plus, the markets kind of reached back to that same 20,000 points. Of course, the volatility did continue for a far longer period, but it did reach back that point. Again, a 2-year kind of a time frame is what it took for the market to kind of rebound back. And the last big fall of almost 24% happened about 4 years ago when the Covid-19 was declared. The markets, which had prior to that was about 40 odd thousand, fell by 24% in a matter of days. Of course, fear of life and death thanks to Covid-19, but the loss of investment value added to the misery, so to say. Therefore, it was a difficult time again. But truth be told, this time the markets took less than 6 months to rebound. By August, the markets had rebounded in value thanks to the measures taken by global governments. So in all these 3 cases, it was globally led, the corrections or the crash as we may now call it, but they also recovered in due course. What does this have to do with what people fear of the impending crash that they're talking about. While we have no idea of how the future is going to pan, one thing is very clear, that if markets were to go down, they have in the past recovered as well. After all, stock market is not a speculative thing. It is deeply based on underlying factors of economic growth and prosperity. Therefore, while there could be some froth in some segments of the market, broadly the market is usually true to itself. So, what will happen if there is a crash of say 20% from these levels going forward? I dare say, in a span of time, which I can't predict today, I believe the market would bounce back. Now, what are the factors leading to that? I believe that the Indian investors are putting in upwards of 20,000 crores as SIP month on month. This is sticky money, this is long-term money. Therefore, a lot of this money will come back into the stock market. Over a 6-month period, that's 1,20,000 crores. That's a lot of money. Next up, I believe the financial institutions and retail investors have got smarter over the last 25 years and realize that every stock market crash is actually a hidden opportunity for them to pick stocks at great value. Therefore, if at all there is a crash, I do expect that the stock market will bounce back in a reasonable period of time, because a lot of these bargain hunters will jump into the market to buy stocks or mutual funds that they have always wanted to, and therefore we do not expect a large amount of correction to stay for a long period of time. Third, I think the globe is also rediscovering India, and if globally interest rates moves down, they have to look at places to deploy their money, and India could be just the next one that they are looking for. So we do expect in the medium term, even if there is a crash, there will be a lot of global funds that will seek out Indian stocks and stock market. Therefore, I am quite optimistic that even in the event of crash, so to say, I do believe the markets will rebound back. But as investors, how do we benefit from stock market crash is really the question we need to be asking ourselves. And I have a few thoughts on that, which I thought is worthy to share. First up, always remember that you have a financial goal in mind that you're chasing. And that goal is your long-term retirement or whatever you're saving money for. That doesn't change whether there is a crash or not. So therefore, hang in there, hang in tight, hold on to it. Believe me, your goal will still be reached when the market recovers. Follow asset allocation. Your goal is made up of a certain asset allocation that you intend to follow in the long term. Extremely important that you follow the same asset allocation. So if before the fall, if you had 70% of your money in equity and 30% in debt, and because of the fall, your portfolio has now become 50-50 in favor of equity and debt, move some extra money that you have in debt into equity and make it 70-30. You are indeed buying into bargain values, and therefore in the long run you would benefit tremendously by following this. A simple asset allocation will ensure that you are in a better place. Most important is not to react to panic. Most people lose money in such crashes because they panic and go out and sell in the market. The idea is to either stay put or add more to equity at these levels rather than trying to panic at these levels. If you followed some of these tenets, my view is that the crash can actually be a great opportunity to build on your portfolio and make it bulletproof for the long-term goals. Maybe your retirement or maybe any other of your financial goals can get achieved better in terms of a crash. Understand that stock market crashes and corrections are inevitable. Stock market is not a fixed deposit. It is not going to be linear. It is not going to be safe. It is going to be volatile. But can you manage your behavior in all this volatility to benefit therefrom? That's really the million-dollar question. And if you can manage to hold on to your investments, as long as you stay put in the market on the best of your investments, believe me, the markets will bounce back and reward you. So stay tight, hold on to your investments. If there is a crash or a correction, Believe me, the markets will recognize it soon enough and it will bounce back.